What's going on, Penny Boys and Gals? It's your boy, What the Duck here, and this is going to be a little bit different. It is going to be a bonus class video. However, we're going to start it off with an interview for one of our members. Danny currently works an 8 to 5, so even more than a 9 to 5, as an engineer for a power company, but he still manages to trade successfully with our Penny Boys premium alerts using what he learned from Pennybois University and what he learned from our trading 9 to 5 class. Enough of me. Without further ado, I'm going to bring Danny onto the call. But how's it going, Danny?
It's going pretty good. Thanks for doing this.
Yeah, thanks for being here. We appreciate you taking the time out of your day, of your, I know you're busy because I know you do work a full-time job, and that's why we're here. I was just wondering, first of all, how'd you find Pennybois stock alerts?
Well, I was in another Facebook group. They did an interview on their podcast with Big Quinch. So that's when I first heard about Pennybois, and I had another friend that kind of joined in too and brought me over. So between the two of them, that's how I came across you guys.
Like, how long have you been trading? Like, have you been trading like for a while now? Are you just wondering what your experience as far as the market goes?
Well, I've always been interested in stocks but I've always taken more of a long-term investing approach to it, just kind of dabbling with 401k, IRA type stuff. September last year is when I actually got more involved in actively trading.
I think that I heard that you work at 8 to 5, so I'm assuming you do not trade full-time then?
Correct, yeah. I don't full-time yet.
Yeah, that's the goal, right, for all of us.
I'm a communications engineer at a power company.
Are you able to trade while you're at work, or is it like you're not really able to be on your phone or computer?
I check in occasionally, sometimes during the day on breaks or that type of stuff.
Trading is so much different than investing. Investing, you just kind of buy a stock and you let it sit. But with trading, you kind of have to be on top of it. I see a lot of your posts here. It looks like you're making good profit while you're working. It says here like you made like a good 33% profit while catching up on the chats in the Discord, or while you're at lunch, or while sleeping even, it looks like you made 23% on one of these trades while sleeping, which you really can't beat that. So were you able to do this prior to Pennybois? Is this some of the stuff that you learned from Pennybois?
No, that's Pennybois. I didn't know anything about setting my sell targets, stop loss, or anything like that. I just buy it, let it sit there for a little bit, a month or two, and see if it went up. The targets and everything, that's all stuff that I learned in Pennybois and EBU classes.
So you have a family and a job, and you're still able to, looks like you're posting a lot of profits here in the profits channel.
The ones that are sleeping, those are pretty nice. I don't have to worry about waking up. Since I'm Central Time, I'd have to wake up at 3 a.m. for the market opens with the Weeble hours. Before market, I'm sleeping or I'm getting ready. That might be when I'm checking alerts or setting a buy if I get a buy, catching up on some chats or whatever. And then after hours is usually when I'm home with family and setting targets and letting those sales come in. Of course, it means that, I may not be getting all the run up. I may hit my second target and keep running, but since I'm not looking at the charts, I miss out on that. I'd rather have my time.
I know that we talk about and stress about, emotions and trading psychology during Pennybois University. We have that whole month going over trading psychology. Do you think that might have helped? Because I know you were saying how you might lose out on certain gains, that might create FOMO. Do you ever find yourself finding FOMO or, having FOMO? And is there anything you do to manage that feeling?
Oh yeah. It's still there. Of course, you always have a little bit of that when you see it goes up, just like yesterday, even it was SVRA that had been alerted, and I bought in, set my targets, first target, and hit the second target later. And then I think the next day it was up over 100%. So I missed out on that, of course. But yeah, you have that FOMO occasionally. And
do you have a certain risk to reward ratio plan, as far as where you sell and where you sell for profit and then sell for loss, or are you kind of base it per trade? Or
yeah, it's more per trade. I'm pretty risk tolerant just because I've always had the set it and forget it investment mindset. So if things fluctuate, go up and down. So I've carried maybe a little bit too much of that over into the trading. Things go down maybe a little farther than I should at times, but a lot of times I'm not in 100%. So I've not set some stop losses, being able to average down when it goes down.
You do use a drop percentage, or you kind of use your own version of the drop percentage? Because I know we have that drop percentage.
Yeah, I don't go ahead and set up all the buys ahead of time and everything. I'll look in occasionally and see if it's dropped 2, 3, 4% past my last buy or whatever. And that's kind of how I run it.
So we do have our drop percent in this calculator that kind of does it all for you. Do you feel comfortable with charting and indicators and all that kind of stuff, or you just...
That's one of the things I need to get more involved in. Working, it's a little harder to spend a bunch of time out in learning that, but I'm starting to get a little more familiar at it.
We consider that you're living the dream, literally sleeping, working, making money, learning how to trade, the whole 9 yards. Commendable, like that. I know a lot of people struggle. They're watching the charts 24/7. They struggle making money, and meanwhile you're taking a nap and you wake up and you're up 15%. So as far as Pennybois University or as Pennybois in general goes, is this something you would recommend to somebody, or is someone who is working?
Yeah, absolutely. The education there it's great to learn of that and get a good base of it, and all the help help that you can find within the Discord, and you, the guides and the pros and the admins and everybody offering to help and ask any or answer any questions that you have. It's all very useful. And yeah, I've been able to keep up with the classes.
Well, that's pretty much all the questions that I have. We are going to be bringing this video into the, we're going to be doing the 9 to 5 video, the actual trading class after this for all the people watching at home or maybe from their jobs. Maybe they're sneaking in the bathroom and watching this interview and watching the bonus class from their work, you know. But, so we're definitely going to be playing that video. So we have a handout in our free class area in the Discord. If people want to look at that, you just have to join the Discord, and the link is on the screen. I really hope that, this class does help, others do what, you are doing. Is there anything else that you like to add, or?
Oh, that's pretty much covers it. Other than join Pennybois and get learning.
Yeah, get to learning. Yeah, learning leads to earning, right? I think that is, it's really important for people to see, like, it is possible to not only invest but also trade while you're working, or while you're busy doing whatever it may be you have in life. A lot of people think that they can't do it because they're working, but you've gone through Pennybois University, and you while working, you've been making money while working, so you're definitely a testament to the fact that it is possible. So really do appreciate you coming on here. A special thanks to you, and for joining me, What the Duck, for this interview, for this video, and you get back to whatever you're doing.
Yeah, I just had to pull a tooth.
Jeez, you're a stock trader, engineer, and for a power company, and a dentist now.
I'll go that far.
All right, Danny, thank you so much. All right, so once again, thank you, Danny. Thank you, Danny, for everything. Thanks for joining us. Thanks for taking the time out of your busy day, trying to work and trying to father, pulling teeth out of your kids' mouths, and and between just trying to get enough sleep. Without further ado, we're gonna go ahead and go into our trading 9 to 5 video. There is a handout for that video. I'm going to quickly show you how to find that. And you go to the free trading class area, and you'll see a bonus class, trading while working 9 to 5. You just click that, and you will gain access to the video as well as the handout in case you missed this video, or in case you want to follow along with the handout. But without further ado, we're going to go ahead and do our 9 to 5 video, our trading while working 9 to 5. So once again, thank you, Danny, and here is our class. On Penny Boys and Gals, it's your boy, What the Duck here, and it's time for another trading class video. This is going to be a risk-to-reward ratio. We're going to be going over the drop percentage buy-in method, as well as doing nightly due diligence and note-taking. All this kind of geared towards someone who is working 9 to 5, or maybe they have a family or whatever it may be. They can't be looking at the charts all the time. Maybe they don't know the charts yet. This is the drop percentage buy-in method. So your first step is you decide your bankroll strategy. What this means is you decide how much you are going to be putting into each alert. What we recommend is anywhere between 5% to 15%. 5% if you're feeling a little bit less confident, and 15% if you're feeling super confident about the stock, and then 10% kind of in that in-between area. We at Pennybois, we don't just go all in on a stock. Like if a stock comes up on our scanner or an alert, we're not just buying 100%. So let's just say you have a $1,000 account, you're gonna put 10%, that's $100. We're not just putting $100 right away into the stock. Because what we do at Pennybois is we do not chase stocks, and it's not a pump and dump type of scenario. What we do is we find stocks that people maybe haven't found yet, maybe haven't done enough due diligence on, and we get in early. But what that means is that we're gonna be getting in during the consolidation period of that stock. So the stock might go down a little bit, it might go up a little bit, but we don't know yet because we're getting in early before all the volume drops in, before everyone else starts chasing it and pumping it. We're getting in before all of that. And we had the least amount of risk by going in slow, because if it doesn't work out, because not every trade works out, you're able to get out with minimal loss. Now, all right, I'm not going to go all in at once. I had to decide what my buying percentages are going to be. That can be 25%, 25%, 50%, meaning your first buy will be a 25% buy, which if you're putting $100 into stock, that'd be $25. Then your next buy would be $25 again, 25, 25, and then 50 would be $50 would be your last buy. Or you can do 10%, 10%, 10%, 20%, 50%, you can do 20%, 30%, 50%, you can do whatever you like, whatever works best for you. I have this PBU note-taking spreadsheet. It's in the PBU class area in our Discord. So if you go to our Discord, you go to PBU class channel, you'll be able to get this blank spreadsheet. So let's just say the ticker is WTRH, right? It's like waiter. It's like a delivery, like an Uber Eats kind of deal. All right, so they're at 332 as a current price, so it automatically tells you that you're putting in $100. That's how much you're going to be putting into the stock. That's 10% of your portfolio. And so what you're going to be doing with the drop percentage is deciding what your drop rate is going to be, which means every time the stock drops X percent, I'm going to make a buy. So let's just say that, you know, the stock, you think that it's not going to consolidate too much. You think it's going to stay in a pretty tight trading zone before running or before going to your target. So maybe you only want to do 1%. Or maybe you think it's going to consolidate a decent amount, but you know, you don't think it's going to go down too hard. That's maybe do 1.5%. Maybe it's a really beaten down stock, and you know, you think it's going to go down pretty hard before, you know, before it comes back up. So maybe you want to do a big one like 2% or even 3%. So what this means is this is how much your drop rate percentage is going to be, and you base that based off of how confident you are in the stock. If you think it's going to go down a lot, you might want a bigger drop percent rate. So what you're going to be doing is you have your buy-in. So let's just say that you bought in right now, like right now, it's 332. You're buying in right now. What this shows you here is exactly. So let's just say you're going to do 10%, 10%, 20%, 50%, and you can change these. This is just an example. It tells you exactly, it knows all the math for you. It tells you exactly how many shares to buy and at what price. So then what you do is you just go into your Webull, and you can do this either at, you know, let's just say you work 9 to 5 and you have Webull, so you go in at 6 p.m., you know, after hours is still going and you want to make some buys, go into Webull and you say, all right, and you do limit buys. You say, I'm going to do 3 shares at 3.32. I'm going to buy 3 shares at 3.25. 3 at 3.18, I'm going to buy 6 at 3.12, and I'm going to buy 16 at 3.06. And you put all those orders into your Webull as limit buys, and you put like good to close with extended hours and all that. And then you go have dinner, you know, enjoy time with your family, you know, get to bed early for the next work day. Or let's just say, you know, you work 9 to 5, you want to get up a little bit early before work, you can do the same thing and just, you know, all these buys in the morning before you go to work, come back, see what happened. Another thing you can do as well is set alarms on your Webull, just in case it does go down while you're working to that last buy. That's, you want to know when you're in 100%, so you can just go to your Webull app and set an alarm for when WTRH goes down to 3.06. Then ding ding ding, it tells you, hey, WTRH is at 3.06. Oh, because of all my buys I have in this morning, it means I'm in 100%. So maybe you can sneak to the bathroom or whatever, and then put in your stop loss and put in your take profit based off of your risk to reward ratio. Before you even start getting into the stock, you want to have a trading plan with your risk to reward ratio. So you decide what your risk to reward ratio is before you even start trading. This is when you're making your trading plan, which we do in PBU. So you decide how much risk you want, how much reward you want. You know, I'm doing pretty well. Maybe I want to have a 1-to-1 risk to reward ratio, meaning that all you need to do is just make more than 50% of your stocks as profit or as wins, and you're going to be profitable. So 1-to-1 risk to reward ratio means you're going to have the same stop loss percentage as your take profit percentage. So let's just say your percentage is going to be 10%, your stop loss will be 10%, your take profit will be 10%. That's a 1-to-1 risk to reward ratio. It can be 7% stop loss, 7% take profit, 5%, 5%. As long as it's even, that's a 1-to-1 ratio, and that's 50%. You need to win more than 50% of your plays in order to become profitable with that ratio. If you want, you can do a 1-to-2 ratio, which means that, let's just say you have a 5% stop loss and a 10% take profit, because 1-to-2 means one risk for every 2 rewards. So your reward is double your risk. So you're only risking 5%. Your reward would be double that, which is 10%. So that's a 5% stop loss, 10% take profit. If you go into your homepage where your portfolio is and all the stocks you have, you can just click one of the stocks and just click close on the bottom, and then click take profit / stop loss. And that way, that's how you're going to be able to put in that stop loss and your limit price at the same time for your sell. And it even tells you your estimated loss, so you can know, all right, I'm in $100, so my estimated loss needs to be $10, my estimated profit needs to be $10, because that's 10%. If that's going to be your goal, is 10% profit, 10% stop loss. Or you would do, if it's 7%, you would just do $7 loss, $7 profit. So that's how you do that as far as using your risk to reward ratio and implementing that into this drop percentage trading strategy. If you want to set your limit buys, you can just do that all at once, and then you set alarms for price increases or decreases. So if the price goes to where you would be 100%, you want to have an alarm for that. Also, if the price starts to go up a certain percent, you might want to be aware of that, because the stock might be done consolidating and might start going up. You want to know when that's happening. Set an alarm for that. So it's pretty easy. You just, you set all your buys before work, or when you get home from work, and then you set some alarms, and then you go about your day. And then, like it says in the on the screen, let the magic happen. It's just as easy as that. As far as the risk to reward ratio goes, that's really up to you what you choose to do. I personally have done 1-to-1 for 20 trades, and it's worked out pretty well. I've done a 1-to-2 for 20 trades, and that actually also worked out pretty well. So I'm still trying to figure out what my percentages, what works best for me, based off of my note taking, which we're going to go over next is note taking. What you have here is your budget. So right now I'm using a $1,500 account. You just put in how many positions you're in. So let's just say you have $1,000 and you're gonna get into 7 plays. So that means $1,000, 7 plays, $100 per play, and a 10% buy would be $10 initial buy. What this is this calculates how much cash on the side you would want to have if you're going to be doing around 30% cash on the side. We do recommend putting some cash on the side. So let's say you have $1,000, maybe $300, $200 on the side, not in stocks. That way, in case something crazy happens, like Apple or Tesla decide to do a forward split, or there's some like a huge news or whatever it may be, and you want to be able to get into it, you want to have cash available. That's what the cash on the side is for. Up here is going to be your watch list, and then down here is going to be the plays that you're in, that you're tracking. And then you have your post-trade notes where you put in the ticker. Did you follow the plan? How much did you make off of it? Entry date, exit date. That way you know how far apart it was. Maybe you got in too soon. If you had a loss, maybe you waited too long. If it ran before you got in, and that's where you put the notes. You said, hey, maybe waited too long, didn't get in 100%, or took got in too quickly and it hit the stop loss really quickly. And then you have a day by day just journaling. I sold these stocks. This is I was feeling this way. Whatever trading psychology notes in there. You can put in what you did wrong, what you did right. That way you can review it and learn from it either every week or every month, however you want to do it. But as far as due diligence goes, so what I would do is at the beginning of so I'm going to show you mine. So this is mine. This is the watch list that I have right now. It's just a bunch of, at the end of the night, what I do is I just go on the computer and I go into Discord. I go into the alerts. So I would go to like alerts by leaf, for instance, and I would just start scrolling and I would find different alerts. And it's just everyone that I'm not either in or that hasn't hit profit or that I don't have on my watch list, I throw it in there. So for instance, I'm going to do this one, IQ. So you just put in IQ, and then it'll tell you the current price, and then you want to put in the alert entry so you can see where it is based off of the current price. So alert entry is 1741. And this is how I would decide if I want to keep it on my watch list. So right now it's only 0.29% away from the entry, so that this actually could be a ideal alert still. So then what I would do is I would do some due diligence. I would go to the chart on Webull or whatever you use. I use all the indicators that we go over in PBU, and I would look at that. Maybe I'll go to FinViz and see what the relative volume is, see what the RSI is, maybe see what the analysts are saying, see what kind of news is happening, what people have been thinking about it. Like this news just came out, is it a good stock to buy now? It went down 18% that day. Your personal entry based off of that, because just because their alert is entries at a certain price doesn't mean that you're going to have to get into it at that certain price. You want to do your own due diligence and base your entry off of your own due diligence. You can definitely use the ideal entry or alert entry as a basis, but it's good to be able to know on your own when you want to get in based off your own due diligence, which is why we teach what we do in PBU, so you can become your own trader and just use these alerts as a guide as opposed to like a thing that you need to be following word by word like a Bible. It's supposed to be more like a guide. So that's how you do your quick due diligence. And that was IQ. That was like, this took maybe like 2 minutes. So for me, I would just look quickly to see what happened. It looks like it went down. That means it could be ready for a push back up. So I would go to the I would probably go to the daily first and check out the daily. And let me get rid of all these indicators. I see how it's doing daily. It looks like it's been just, that's interesting. Yeah, it looks like it's been going just up and down between this resistance level and the support level. And right now it's trading at let's see, let me get rid of it. It's trading at 1736, so it's at near that support level. So maybe I would put it on my watch list. Maybe I wouldn't put a buy in right now, or maybe I'll just do a 10% buy, which is a quick buy that you just want to watch the stock. So I only want to be in 7 plays, so maybe I want to watch it and know that I want to get into it later. So maybe I'll just make a 10% buy. What's the worst case scenario? It goes down 10%. I'm only in 10%. So if you have a $1,000 account, you're losing $1. So not a big deal. That way you have it in your in your portfolio already, and then you're watching it, you're aware of it. That's another option. So that's just how you do some quick due diligence if if you're working. What I would do is I would either in the morning or the night after, you just put all those, you just go to one by one, you just go to the alerts that you can find. There's usually like 3 or 4 of them probably that haven't already hit target, and it usually takes me like 5 minutes to put 4 alerts in, which is usually about how many I put in per night. And then the day after, so like let's just say I put this in last night, then the next morning I'll wake up and I'll see which ones are close to target still, or sorry, close to entry still, and I'll put the price. If you're doing the drop percentage, I'd put the ticker in here, put the current price, put my buy-in price, and then I would just put in all my buys and my alarms, and then I would go to work. And I would work, and I wouldn't have to look at my phone unless my alarm goes off that it hit my 100% area, or that it's starting to go up. Maybe it's starting to do that upward confirmation. This is definitely, I think, a couple tools that you can use that will make your life easier as far as trading goes while working 9 to 5. So that is the note taking. You also then do your post-trade notes. This is what I do just so I can kind of like see what I did wrong, what I did right. Maybe if you're doing a drop percentage, it's a little bit easier, because for me, I'm doing notes based off of, because I'm buying based off of support and resistances. So for me, I'm putting notes in like, if I got in too fast, or I read the wrong support. But if you're doing a drop percentage, you can just say, drop percentage for this type of stock. It had a lot of volume. I did a high drop percentage. Next time I'll do a lower one if it already has volume, or whatever notes you can, whatever you can take away from each trade is good to put into this. And so the left is for each trade. You can do your P&L, and then the right I put my P&L as far as the total P&L goes, not per trade. And then I just say kind of like what happened that day if I follow my plan. So that's just how you do some nightly due diligence. That's how you can implement your risk to reward ratio into your trading plan. And we also went over the drop percentage buying method for people who work 9 to 5, or people who cannot look at the charts all day for whatever reason. These are some ways that can help you with that. Make sure, if you haven't already, to join our free Discord at pbalerts.com/stocktradinguniversity. You can also check out our premium alert service at dadmancapital.com. Premium alerts come with a 3-month trading class program, stock alerts, weekly cash giveaways, and live stream trading, as well as an amazing trading community. You can also join us on Facebook at facebook.com/groups/btpenny. And be sure to like and subscribe to WTD Pennybois on YouTube so that you can be notified when another trading video is posted. All right, I hope to see you then, and I hope that you all make some bread.